Hello and welcome to Kotak Securities weekly fundamental podcast. I am Rini Mehta. Equity markets focused on evolving growth inflation dynamics, ongoing fourth quarter results and volatile global commodity prices last week. Markets continued to price in the probability of aggressive rate hikes by the US Fed. So last week Sensex gained 1.3% while Nifty was up 1.1%. Other indices like mid cap and small cap underperformed last week, and most of the sectoral indices ended in green. BSE, FMCG, and auto each gained around 2%, while most other sectoral gainers were between 1 to 2%. BSE Telecom was the biggest loser, losing around 3.5%, followed by metal and oil and gas. Now, on the economy front, the International Monetary Fund said India needs to strengthen its labor, land and education sector with a focus on improving participation of women in the labor force if it wants to improve its growth potential. Now, in the global news, GDP in US unexpectedly declined at a 1.4% annualized pace in the first quarter of current year, marking an abrupt reversal for an economy coming off its best performance since 1984. The data was reported by the Commerce Department on Thursday. The negative growth rate missed even the subdued Dow Jones estimate of 1% gain for the quarter. However, shares across major markets were buoyed last week by a robust round of corporate earnings, with the positive sessions in Wall Street leading into optimism in Asia Pacific shares. Now, if we look at foreign participation in the markets last week, FII flows continued to be net sellers month till date in April to the tune of rupees 40,652 crores as markets continued to price in the probability of aggressive rate hikes by the US Fed. Guys, FII flows are likely to remain volatile in the near term. Other than Indonesia and Thailand, all other emerging markets witnessed outflows in the month of April. Coming to some topics for this week, our pick of the week is Macrotech Developers or LODHA. LODHA closed financial year 2022 with sales growth of 57% year on year and sales of rupees 90 billion and offered guidance on achieving pre-sales of rupees 115 billion, that is 27% year on year growth for financial year 23. Margins for full year 2022 remained healthy at 35.5%, and deleveraging was to the extent of rupees 68 billion, aided by operating cash flows of rupees 41 billion as well as an equity raise of rupees 63 billion. So guys, we maintain buy rating with revised fair value of rupees 1350 per share from rupees 1370 earlier. Now let's look at some fourth quarter updates from last week. We gave a buy rating on HDFC Life, which had a moderate Q4 performance. So as I said, HDFC Life's fourth quarter performance was moderate with 15% value of new business growth. Increasing focus on the protection business and short duration non-par coupled with integration of Exide Life will drive near-term performance. HDFC Life's business franchise remains solid. However, overhang of stock sale including likely capital issuance will temper near-term performance. So we retain buy with fair value of rupees 775. Lastly, we have buy rating on SBI Life. SBI Life reported flat value of new business on the back of 4% year on year annual premium equivalent growth in fourth quarter and surprising margin decline on a solid base and product repricing. Full year growth remains healthy with further market share gains. So we expect higher than market growth to continue, and we retain buy with fair value of rupees 1525. So guys, that's all for today. See you again next week. Signing off. Thank you.